All right, let's take a look at the markets this morning. We're going to do our pre-market update, what we're going to look for this morning. Let's go over yesterday's plan, what happened. So yesterday, we went over this pre-market. We added an oscillator to our 30-minute chart that tells us if we need to look for buy zones or sell zones. In other words, are we looking to buy pullbacks or sell pullbacks? So this oscillator is very simple. And members, I'll go over this again after this video, how to set it up on your own charts. And members, if you do not come into the room, if you do not know how to set this up, email me and I'll email you back exactly how to set this up. It's really a neat way to find if you need to be a net buyer or a net seller for the day and to keep on the right side of the market. Because if we're going to buy pullbacks, we need to know if the market has strength. And if we're going to sell pullbacks or short pullbacks, we need to know if the market has weakness. So essentially what we're doing is buying strength and selling weakness. So yesterday, when I went over this with you at 9 o'clock in the morning, 8:45 yesterday, we were sitting right here. Price action was sitting right here. Now we know there's two things that we look for, and you could use this oscillator by itself, or you can use the moving averages in conjunction with it to look for our bias to buy or sell. So one, we're looking for the 50 MA above or below. So what that tells us, that's going to tell us if our bias is up or down. Meaning, do we look for sell zones or buy zones? 150 MA above is price action above or below. So if we look at the price action here, the 50s is blue line if you look at it. And you noticed we closed for the first time on February 17th at 11:30 a.m. We got above the 50 moving average. All right, that's strength in the market. The market starts strengthening up. The second criteria, which is very simple, easy to see, we want to use our oscillator above or below 50. Now, what we want to do, if the red line is above 50, we are net buyers. If the red line is below 50, we're net sellers. So this is our pre-market plan going into the trading day on a daily basis using those two parameters. So going into yesterday, and I'll show you the big buy point we had yesterday that we set ourselves up for yesterday before the market opened. We went over yesterday right here in the live room on the microphone, and I even typed it in the chat room. There will be no shorts, only buy pullbacks. So at this level, if you go back and look in the room, what I typed in under the chat, at 9:40, I said, patience, let it line up. Strength is up. No shorts in capital letters. After the market opened up on the 5-minute opening range is now done. The 5-minute opening range will dictate which side of pressure the market is in. We are still above the 50 MA and relative strength is up. No shorts. Waiting for first setup right here. So at that point, I typed it in the room, said on the mic, we're looking for the first buy retracement. We're above the 50. The strength is up. We're above the 50 MA. The wicks don't count if it breaks. It's the body of the candle. It's above. So we're looking for a buy setup. So what we did if you look yesterday, to recap, we'll go over today's trading plan in a second too. This is what we talked about. Skinny this down. Right here, we talked about as the market was moving, we do not take any short positions. We don't take any yellow trigger entries because we're above the 50. We're above our 50 relative strength. The strength of the market is up. No short positions. We're looking for the first buy position. We're looking for the first buy retracement inside of the zone. Hey, Russ, good morning. Thomas, good morning. Steve, good morning. Hey, Derek, good morning. Leo, good morning. So we're looking for the first buy position inside of the zone. The market, the first 5-minute opening range, educate traders to wait for the first 5 minutes. We're looking for it to put a position on between 9:35 to around 10:10, 10:15. We should have a nice position by then for a nice possible runner. The market, we put this little line, what's called the 5-minute opening range, the 5-minute high, 5-minute low. It breaks out of the 5-minute opening range, showing pressure to the upside. There it is. The first retracement was in our proprietary buy zones. These little dashes right here are our proprietary buy zones. They're called grabs, liquidity sweep zones. That's where the market likes to come down, sweep stops out, grab liquidity to push the market higher. Let me take this off so you can see it clearly. We get above the opening range. We come exactly inside of my liquidity grab zone. Now it can't close below it. That's how accurate these zones are. It cannot close below it, not even by one candle or one Rico. It lands right exactly on the low. We see this over and over again. Lands right exactly on the low. It's inside the zone. We get a yellow trigger entry. Your speakers, if you have your speakers on, you'll get an audible alert. I like to use wave 4, nice loud beep. Gives you an arrow too. That's your time to get in. Now there's 2 ways to do this. One, you can use your chart trader to get in and trail your position on your automated trail with chart trader with your stop. 2, you can use our automated strategy that comes with the system where you're knowing that we're looking for buy setups only. And if we're getting into a retracement, you can toggle your automated strategy on and let the strategy enter for you and trail for you also if you'd like to do that. You can see it came inside the zone, broke above the opening range. The market proceeded higher. It went right to my target price of 20 that we had at this level. I set at 930. We have a 20 target price, and then we have a 55 target price if we get a buy signal. The 20 was market profile, which I'll show you in 1 second. It went right to our market profile. Now what we have is we have targets, weekly targets already set up. Sunday night, where the market should go. It hit our 15 earlier on Monday, our 15 short, went right down to it. Now our targets are 55.5. If we sell off today, which we are in a sell-off mode right now, 68.15 is our target again. Then I got 67.65. So we'll go over that on our trade today, what we're looking for in a second. But that's how we like to do it. If you look at yesterday, where'd our target go? Here's our buy setup retracement. It caught the low. Where to go to? Where's my target? I had this target all the way over here at 8 o'clock. Actually, I had the day before. I had this target on Monday or Sunday night. It went right to it. Then crashed down. So we use market profile to dictate where our fair value levels are, where the market tries to get to, which I'll go over that, the daily plan, here in a second. So in summation, we use this chart to guide us. Now going into today's session, this is February 19th, 9 a.m. What's our bias? Well, it takes a nano of a half a second. Look at this. Is it nano of a second that we are below the 50? So the bias is what? Down. Our oscillator is below the 50. So our price action is down. The strength of the market is down. So what we're going to do, we're going to sell liquidity grab zones. So today, we're going to wait till the market opens up at 9:30. Wait till 9:30 to 9:35. We're going to see the strength of the market. It's going to indicate, just like yesterday, the strength of the market on the 5-minute opening range, push above the opening range. Whoops, moved it. It pushed above the opening range, showing strength, gave us a retracement right into our buy zone. We got the buy zone, and this was a great buy. 68.78, and it ran all the way to 69.25 3/4. 78 to 25 3/4. So now we'll look for that again today. Now we're looking for a sell opportunity, a short opportunity. We'll let the market open up around 9:35, 9:30, 9:35, get some energy, and then we'll get to work. So that's our plan today. We'll go over that in a second. I want to go over to how to set this chart up again with you members after I get off this video. It's very important because it keeps our bias. Because if you look the entire last week, look at this, just look at this oscillator below the 50. Look at the big sell-off we got. Got above the 50, look at the big rally we got. Got below the 50, look at the big sell-off we got. Got above the 50, market cranked back up to the upside. Getting below the 50, now we got a possible sell-off coming all the way down to 90.5 again.